All right, let's talk about something that is quietly but completely reshaping our world and our wallets: digital money. Now, I know, it might sound like something out of a sci-fi movie, but it is already here and it's evolving faster than you can say tap to pay. So, we're going to break down what that really means for you.
But first, let me ask you a question. When was the last time you actually used physical cash, like bills and coins? Seriously, think about it for a second. For a lot of us, tapping a card, scanning our phone, or just clicking buy now online has become totally second nature. Our whole relationship with money is changing, and that's exactly what we're going to dig into.
So, what even is digital money at its core? Well, the simplest way to think about it is any kind of currency that's just stored and used electronically. There's no physical cash changing hands. So, every time you use your banking app, Venmo a friend, or buy something online, yep, you're using digital money. It's not about the paper in your wallet, it's about a digital record of a transaction.
And that brings us to a really key point here. This isn't some far-off futuristic concept. We are already living in an age where most of our money is digital. You're using it way more than you probably even realize. So let's look at the basic characteristics that actually define it.
Okay, so this basically breaks down the DNA of digital money. First off, it exists purely as data, bits and bytes in the cloud. Second, it's pretty much instant and global. You can send it anywhere in the world in a flash. Third, it relies on some seriously powerful encryption to keep it secure and prevent fraud. That's a big one. And finally, every single transaction is recorded and can be verified, leaving a clear digital footprint. It's money that's built from the ground up for our super connected world.
So you might be thinking, okay, if I'm already using it, what's all the fuss about? Well, it turns out there isn't just one type of digital money. There are actually 5 main categories. And understanding the differences between them is, honestly, the key to seeing where all of this is going. This table gives us a great bird's eye view of the landscape. First, you've got your standard bank money, right? The stuff in your online banking app. It's secure and heavily regulated. Then there's mobile money, like M-Pesa, which is all about being accessible and convenient, especially on your phone. Then, of course, the one everyone's talking about, cryptocurrency, like Bitcoin, which is famous for being decentralized. We'll get into that. Stablecoins are a type of crypto that try to keep a steady value. And finally, you have CBDCs. That stands for Central Bank Digital Currencies, which are a new form of digital money that's actually government-backed. Now, out of all these, the biggest comparison everyone wants to know about is between our traditional money and crypto. So let's dive into that. This is the question that really trips most people up. I mean, when we talk about this digital money revolution, we're usually talking about the rise of cryptocurrencies. So how are they so fundamentally different from the digital money that's already sitting in your bank account? Is it really just a simple battle of old versus new? Well, not exactly. The differences go right to the very core of how this money is created, how it's controlled, and how it gets its value.
Let's break this down. So traditional money, both the cash and the digital dollars in your bank, is issued and controlled by a central authority, like a government or a central bank. And that control makes it relatively stable. Cryptocurrency, on the other hand, is decentralized. Okay, so what does that mean? Think of it like a giant public notebook that isn't owned by any single person or any single bank. Instead, it's maintained by a massive global network of computers. That's the big idea. Now, this structure gives it incredible freedom, but as you can see, it also leads to really high volatility, which just means its price can swing up and down like crazy.
And all of this leads us to some pretty big trade-offs. Like any new technology, digital money is not perfect. It offers some absolutely incredible advantages, but it also comes with a whole new set of challenges that are so important to understand. Okay, on the plus side, the benefits are huge. Transactions can be almost instant and a whole lot cheaper, especially when you're sending money across borders. I mean, just imagine sending money to family overseas, not in days with huge fees, but in just a few minutes for pennies. It also opens up financial services to literally billions of people who don't have bank accounts. And it enables crazy cool innovations like programmable money, which is money that can have rules coded right into it. We'll see a pretty wild example of that in just a bit. But, and this is a really big but, as with any powerful new tool, you have to be aware of the potential downsides. It is not a perfect system, and the risks are very, very real.
Yeah, the risks are significant. Cybersecurity is a major one. Digital wallets can be a big target for hackers. We already talked about the wild price volatility. There's also a ton of regulatory uncertainty, because, let's be honest, governments are still trying to figure out how to handle all this.
And with any new tech, you've got new privacy concerns and, of course, the ever-present risk of fraud and scams. Being smart and being safe in this world is absolutely critical.
So, after weighing all the pros and cons, what does the future actually look like? I mean, where is all of this incredible innovation taking us? Let's take a peek at what's predicted to be right around the corner.
This right here shows you just how transformative the future could be. We can expect much wider adoption all over the world, with more and more people getting access to these financial tools. But the truly game-changing stuff, that's the integration with AI and the Internet of Things. I want you to think about your smart fridge. Imagine it not just knowing you're low on milk, but automatically ordering and paying for it. That is programmable money in action. It's money that can literally execute instructions on its own based on rules you set. How cool is that?
So, as we've seen, this whole thing isn't just about a new way to pay for stuff. It's a fundamental shift in how we think about value itself, how it's created, how it's moved around, and even how it's programmed. The tech can be complex, for sure, but the potential impact is crystal clear. Money is becoming faster, more global, and fundamentally smarter. The future of digital money is being built as we speak. So the only real question left is, what role will you play in it? Thanks for tuning in.